crude oil reacted to this 200 days moving average, forming an inverted hammer that was last Thursday, sitting right above it, but it has since broken below. Therefore, is this 200 days moving average still valid? And let's switch over to this weekly chart and take a look here. And what we saw over the past few weeks, it could be a consolidation, a retracement, or even the market taking a breather before it moved higher again. And what we can see here is that this current level, it is near to the support when the energy crisis happened on 28th of February. We will also discuss the fundamental reasons that support this technical setup. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. And when prices stay above 200 days moving average, it indicates that the long-term trend is still potentially moving upward. And let's switch over to this monthly chart and let's examine the past historical data on crude oil based on this 200 days moving average. It means that whenever the price stay above 200 days moving average, it tends to move on the upside. Whenever it stay under, it tends to be under pressure. And what we could see here that, let me just switch all the way back to the before the millennium, that we could see that when it stay above, it tends to stay above. It reacted very nicely and it stay above. But when it stay below, it tends to stay below for a good number of years. And where we are here right now is that I think it's finding a balance at this point in time. And as we could see over this past 1 month, in fact, the current month, it is testing this 200 days moving average. And over the past few years is kind of waver in and out, therefore forming a range. And let's look at the weekly chart, and it should apply on the weekly chart as well. And I believe that this week is a test, and this is 28th of Feb. It's a very crucial date. It's a crucial support as well. And if the weekly closing close above or around this 200 days moving average on a weekly chart, it could also signal that the market could be supported. And the daily chart is as such as well. And there was a reaction. And could it pull back up again? We will see. And let's also study the fundamental to see that whether it align to these technical studies. And if we are going to discuss the reasons crude oil prices could remain elevated, I think there's a long list of them. But how about the very one key fundamental reason why crude oil could be supported and risk of trending higher in prices? I think that it is because the Strait of Hormuz energy crisis is unlikely to resume back to its business as usual. Even after the crisis that started on 28th of Feb this year began to ease, when business is not as usual, costs will likely increase. And this was my previous videos on crude oil. And let's take a look that I posted on the 4th of June. The title was Crude Oil Prices Reflect the Current Event Tug of War. And then we discussed that whenever there's two camps of traders simultaneously holding opposing bullish and bearish view with similar transaction sizes, they strike an equilibrium, creating this trading range that we're seeing here, or tug of war price behavior between buyer and seller. But ultimately, it should break above this range and start trending higher. And let's see how about today. Is this range still valid? And allow me to switch to daily chart, and we're already at daily chart. And this was what we studied. And I believe that back then it should remain in this range, trap in this range. Ultimately may break this range and move higher. But we have to also refine it as the market develop. So what I feel that the market will continue to range bound, but I have to make adjustment to a bit lower here. And let me just try. And all these are significant points. And this was the time that the 28th of Feb where the energy crisis happened on Saturday, and that was a Monday. And all these significant points, I would like to place this here maybe, and it kind of align quite aligned together with the 200 days moving average on the daily chart. So we still have 2 more trading days to go. If any of the day close right above or at or around this 200 days moving average, together with this wedge, which I believe that the market will continue to form this wedge, and it may get a little bit tighter before it start to break up and go. So what I'm suggesting here is that on daily chart, if it close above or at around this 200 days moving average, and that will also lead me to the weekly chart. As it close above, we could see that it could form a hammer. Of course, there's 2 more trading days to go. I will keep a very close watch on this. So for your reference, there are a few insights that I've posted on my this video tutorial. Let's go over here and you can type this crude oil. And since April, and that's my view, and I think it's still valid since April, that's where the energy crisis happened. The crude oil price target at $140. You could see that over this, I believe it's a quarterly chart that you could see over the last few decades, it was this uptrend channel. And over at this, perhaps the monthly chart or quarterly chart I'm seeing here, we could see that there was this cup and handle formation, and also discuss about crude oil inflation rising in stages. We could see that over the past decades, the average price, and I believe that was in the 70s, it was at $17. But over the last 20 years, the median price was at 50. But as it break, that will be for the future. There's always a new median price. So why I believe that crude oil to stay elevated, I will continue to make reference to them as from time to time, because I may get distracted, especially like right now. We could see that the crude oil is coming down, but I will, based on what we've discussed, I will continue to stay focused on the daily closing, the weekly closing, and I will take action from time to time. If you find what I just shared is useful, like it and save the link for future reference. And also share the link to your friends. My name is Con Hao. I enjoy studying how different markets currently behave to uncover emerging trends and potential trading market of tomorrow. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.